Good afternoon, everyone. We'll let everyone join and start in 2 minutes. Good afternoon, everyone. While others join in, we will launch a poll on the screen. You could settle in and please go choose the suitable answer while we start. We'll start about in another 1 minute. Greetings to everyone and welcome to today's webinar. I am Meghanath, Senior Project Associate at World Resources Institute, India, and we are pleased to launch the second session in our MSME training series on corporate GHG accounting and reporting in partnership with CII, that is Confederation Indian Industry. We have the poll answers in front of us, and we are glad to know that there is strong agreement about GHG accounting and the need for it. Thank you. A few points before we begin. All attendees will remain in listen-only mode. Today's webinar will be recorded and shared with registered participants. Please use the question pane on the right for any question comments during the webinar. These questions can also be addressed to specific presenters and panelists. If you are having trouble with audio or video, please send a message to the organizers in the chat box. Can we go to the next slide, please? Many of you must know that this is the second session of the MSME training series, followed by the first session that was done in September. The aim of the training series is to provide MSMEs with skill sets on a range of topics, such as carbon footprinting, energy efficiency, renewable energy, opportunities from existing policies, and build a platform for knowledge sharing between MSMEs and large-scale industries. With this context in mind, to help facilitate a shift towards a low carbon, profitable and resilient MSME sector in India, WRI India, in partnership with CII, is conducting an online training series which is free, open to all, and participants will also receive a certificate of participation on completion of each training session. Could you go to the next slide, please? With the focus on building capacity among MSME and aid in their shift towards a low carbon operating and profitable MSME sector, the training session intends to build awareness around climate change, its impact on business, economy and livelihood, enhance readiness amongst MSME around climate action, help MSMEs make the most of existing regulations, markets, and opportunities available globally as well as domestically. Prepare MSMEs for future regulatory landscapes where there may be direct regulations for MSMEs on emissions, renewable energy, waste management, and many more such topics. Help skill practitioners champion sustainability and efficient operations within the organizations. And finally, encourage an uptake of initiatives towards resource efficiency across the economy. We hope that you join us for the future sessions also and make most of this opportunity. Next slide, please. With that, we start today's session on corporate GHG, that is greenhouse gas accounting and reporting, where you would be walked through all concepts and steps on how you can track your company's emissions. Going forward, Mr. Varun Agarwal will set the context and build the case for GHG accounting for MSMEs and familiarize you with the topic. Following this, we have with us Dr. Sunita Purushottam, Head of Sustainability at Mahindra Life Spaces Developer Private Limited, who will share their experience and expectations of engagement with suppliers on GHG emissions. Then, Mr. Shubrata Chakrabarti, Senior Manager at WRI, will take us through principles and requirements of GHG protocol, corporate accounting and reporting standards, followed by Atiq Sheikh, Counselor Energy and Climate Change, CII, who will focus on discussion on GHG accounting and reporting concepts, data requirements, and tools to calculate and GHG inventory. We have with us Mr. Sirish Kotale, Chairman and Managing Director, Kotale Engineering Private Limited, who is very willingly ready to share his practical insights and experiences from their MSME journey on GHG accounting. And finally, Ms. Shubhangi Gupta will connect the dots and expand on accounting and reporting and of how you can use these concepts to reduce your GHG targets. Could we go to the next slide, please? I would now welcome Mr. Varun Agarwal, Project Associate WRI India, to the platform by unmuting himself. Varun comes with an experience in the areas of climate policy, greenhouse gas inventory, reporting, and low carbon development strategies for various sectors of the industry. He holds a master's in environment and natural resource management and has a strong hold on environment regulatory compliance and techno-economic environment modeling. Over to you, Varun.
Okay, thanks a lot, Megha. Okay, so I'll just take 5 minutes to briefly set the context before we move on to our excellent and diverse set of speakers for this session. Now, GHG accounting at the company level simply refers to the quantification of greenhouse gas emissions due to business activities of a company. And this is usually the first step in planning or implementing any emissions management or reduction initiatives. And why should companies undertake GHG accounting? Now, there are two aspects to the answer to this question. The first is the social responsibility of all actors, whether it's national governments, local governments, or the corporate sector, to reduce GHG emissions in order to address the increasing threat of climate change and its associated impacts on society. And this is something that we discussed at length during our first training in the series. The other aspect, which we'll focus on today, is the business case for GHG accounting. In other words, why undertaking GHG accounting and management can be good not just for society, but also for business. Right? And in this context, I mean, first, GHG accounting can actually help companies discover opportunities to make their operations more efficient and reduce operating costs. A typical example of this is reduction in energy bills from improving energy efficiency, for example. And such efficiency improvements are key to making the MSME sector more competitive and profitable. And we'll also have, like Megha said, a speaker from an MSME later on in the session who will share such insights which they got from their journey on GHG accounting. A related point to this is also that of capital costs. MSMEs that have identified low emissions or green technology options can also avail the benefit of various policies and financial schemes, thus reducing capital costs as compared to traditional investment. And in India, the Ministry of MSME as well as the Small Industries Development Bank of India, SIDBI, have several programs ongoing that provide financial support in the form of subsidies, credit guarantees, or low interest collateral for green technologies, such as investments in energy efficiency or renewables, specifically for the MSME sector. And we are planning a subsequent session to explore this aspect in detail as part of this training series. Now, secondly, GHG accounting and management helps companies build future preparedness by protecting them against impacts of any potential sort of changes. These can be changes in regulations or changes in the requirements of your business partners, right? So as far as sorry, shall I continue? So Megha, I think you muted me.
Yes, sorry.
Are you able to hear me?
Yes, yes.
Okay. Okay. Yeah. Okay. Second, I was just saying that as far as regulations are concerned, we already have some examples of sort of related regulations in India. One of them is a coal cess that we have of 400 rupees per ton on coal production. And such regulations, basically, when they're introduced, these impact companies which are dependent on traditional technology of fossil fuels much more and give a significant competitive advantage to the companies that have made an early transition to cleaner technologies or cleaner sources of energy. And going forward, it's quite likely that such regulations will increase or become more stringent, given that there's an expectation from all countries, including India, under the Paris Agreement to enhance national emission mitigation targets. Right? And another very important point, which is very relevant for the MSME sector, are the changing procurement requirements of large businesses, which are very important customers of the MSME sector. And large businesses are increasingly looking at the GHG emissions of their MSME suppliers as part of their procurement criteria, which means that MSMEs taking early action on this issue are likely to have increased business opportunities going forward. And in fact, our next speaker is from an organization that's actively addressing the issue of GHG emissions in their supply chain, and she'll give us some practical insights into the kind of expectations large businesses have from their MSME suppliers in this context. And finally, quantifying and tracking GHG emissions can also enable participation in carbon market programs. And the carbon market programs are also something that we had covered in our first session. And some of you also may already have the experience of participating in international market mechanisms like CDM or voluntary programs like the VCS or Gold Standard. Let me only add here that there's also growing interest in domestic carbon market programs in India. For example, the Network for Certification and Conservation of Forests, NCCF, is working on developing a registry for a voluntary domestic carbon market in India. And there have also been several discussions about a carbon market pilot for the MSME sector by the Ministry of Environment, Forest and Climate Change as part of the PMR project with the World Bank. And so basically, given this interest, it's also sort of it's companies that are taking early action on these issues that would be in a position to gain financially. So with that brief context, let me hand it back to Megha to introduce our next speaker and take the session forward.
Thank you, Varun. I'm very pleased and excited to have Dr. Sunita Purushottam, Head of Sustainability, Mahindra Life Spaces Developer Private Limited, to join us today. Dr. Purushottam is a champion in sustainability with over 20 years of strategy and environmental consultancy experience with over 50 plus engagements executed. She wears different hats as a CSR Council member at Mahindra & Mahindra, a proactive working group member at the World Business Council of Sustainable Development, a certified GHG emission quantifier, and fellow at Royal Met Society London. Dr. Sunita has worked with regulatory bodies in UK and India in various infrastructure development projects and city planning. She is well versed with various reporting frameworks such as SASB, GRI, CDP, and integrated reporting. She has authored many white papers in sustainability and is a speaker in national and international forums. She will bring us a clear understanding of why the issue of greening the supply chain and accounting GHG emissions is relevant for any company, especially for MSMEs. May I request you to please unmute yourself, Dr. Sunita, and take over. Dr. Sunita, are you able to unmute yourself? Okay, I have unmuted you.
Thank you.
Okay.
Happy to be here. So I'm Sunita, as very nicely introduced by Megha, and we are trying to work with our suppliers and contractors. Being in the real estate, our value chain comprises of not just the materials that we procure, but also the contractors who are at our location. So there is a very deep relationship that we have with our value chain members for developing the buildings and the infrastructure development that we do. So I'm going to touch upon how we want to create a framework to engage with our suppliers, and going forward, what is the strategy to deepen the engagement, especially in the context of greenhouse gas emissions, and why. So next slide, please. So the value chain approach is important, and it is about understanding how we work in a collaborative fashion to minimize risk, improve efficiency, and encourage innovation. So these are the three key pillars that could help us get greater value, which is much more than just the direct operations of the company. So getting minimization of risk associated with the environmental impacts, especially in the context of climate change, also reputation risk, upcoming regulations in the context of GHG emissions. And as all of us know, that if we look at energy efficiencies and material efficiencies, we will touch upon more efficient GHG inventory in sense of reduction. So these, and if you look at how materials come, where do they come from? Again, we are, looking at GHG emission reduction. A lot of innovations can be done both in the process of developing a particular product, and also procurement of innovative products and more efficient products. Again, there is a direct touch point with reduction in GHG emission. Next slide, please. So, and we are calling it a value chain instead of supply chain, because value is a word which helps us enhance the entire outcome of any activity. And therefore, it is a value chain instead of the supply chain. Next. And in this value chain, who are the partners? So we undertook a value chain mapping right from land acquisition to the product handover and use phase. And we look at raw materials and labor, and that is where we are looking at our contractors and our materials. So all of these are associated with how we construct and then how we hand over. Next. But it's in the planning stage that we will have to look how we collaborate and what we procure, how we procure the materials, because planning and design is very key to the outcome and the use phase emissions associated with our product. Alternative materials, certified high quality materials, local sourcing are also key in emission reduction. And of course, how we construct and the way we construct, we will have to achieve resource efficiency. Again, that is linked to the GHG emissions. Next slide, please. Okay, so a variety of ways of looking at pollution mitigation and the efficiency improvements. It's a continuous improvement that program that has to be put in place. The two key areas are, of course, looking at materials, and the other is more efficient construction. So one of the key ways is to identify waste streams and measure and identify the opportunity cost of the waste, and of course look at a mechanism to reduce the bias towards to move towards innovation and to minimize the wastage of materials. And it is linked to the GHG emissions, because the more you waste, the higher would be your GHG emissions. Next. The other aspect, of course, is human rights and health improvement. In a way, the human right aspect, especially of occupational health, is linked to the emissions from the fuel in form of air pollution. So that's another element of occupational health and safety which is linked to emissions. Next. So our value chain ecosystem comprises of materials, people, and services. I spoke about contractors and suppliers, but the services is also a key part of our ecosystem, where we look at, variety of consultants, design consultants, management consultants, people who project manage our sites, and so on. Apart from that, we have companies like who help us manage the services for our cities, and food and beverage services earlier, as well as the events. So services also are important, and explaining to them how and what our expectations are around fuel usage and energy reduction and efficiencies is also important. Next. So the value chain approach is to create a framework to engage and institutionalize this process in the current, functional, the way we function within the organization with all the departments and the organizational processes. So this framework helps us integrate and institutionalize this process. So for example, in this year, we have actually put a KRA for all the people in the contracts department to enable us to reach out to all the contractors and the suppliers to sign the code of conduct. Next. So, what are our policies that guide our strategy? It's very important to have the policies signed off by the senior leadership. The policies actually provide that, the level of commitment uh, and a high level guideline for all the stakeholders to adhere to within the organization and external stakeholders as well. It is important that the policies are updated. So last year we rolled out our supply chain policy, the sustainability policy, and the green supply chain management policy was there. We revamped it a little bit to reflect our, the change in the approach, and fine-tuned it. So the sustainability policy has 4 pillars: sustainable products, sustainable offices, sustainable sites, and sustainable communities. So that is the scope of our sustainability policy. Next. So the 4 pillars of our policy, as I explained, we have a 100% green portfolio. Our sites, we are looking at 2 things: climate change abatement, worker welfare, and resource conservation. Sustainable offices, again, GHG emissions are very important, associated with our emissions from our offices, and communities, which looks at inclusive development in wherever we are operating. Next. One of the key policies that we rolled out was banning the single-use plastic. It's applicable for our sites and our suppliers, and we are looking at working with our suppliers for take back and recycling. Next. This is our current approach where we are looking at quality, safety, and environment. In the environment aspect, which looks at reduction in GHG emissions, it is to procure major materials within 400 kilometers of the project site, recycled material of the products that we are trying to use in our construction phase, and certification of the supply of the recycled material. So this is what we are looking at, trying to procure green materials which help us reduce the embodied carbon in our projects. Next. So, yeah, we spoke about two things for the contractors. There's a pre-qualification criteria, and we have factored the in the general contractual conditions. What are the things we need from a contractor's perspective? What are the do's and don'ts into the environment management system clauses? And I spoke about the local procurement and working with suppliers to take back materials. Next, waste materials. So, what lies ahead in terms of the code of conduct? We have rolled out the code of conduct. The code of conduct has levels. So, there's a minimum level, then a qualifying level, and a leadership level. Signing of this code of conduct is important. All our suppliers and contractors have to be at the minimum level, which talks about basic minimum environmental and social compliances to be adhered to. Then all our suppliers and our contractors will have to undertake self-assessment, followed by a third-party assessment that is like an audit. The point here is that customers are now worse than the regulators. It could be a huge burden for the MSME segment to work with clients like us. The reason being that there is a lot of expectation from companies like us to adhere to set of the code of conduct and the self-assessment, and to undertake this journey. And it is in favor of the MSMEs themselves to be able to understand that all of these lead to two things. One is risk avoidance from a perspective of compliance, and the other is efficiency in operations, which will help in giving bottom line savings in terms of energy savings or fuel savings or efficient processes or innovation and so on. So yes, customers are therefore now worse than the regulators in terms of demanding what is expected in terms of GHG performance. Next. And it's not just related to GHG performance, it's the entire gamut of areas that the code of conduct has. The code of conduct can be shared with all the MSMEs to understand that, okay, what is the minimum level? It's a must have to do business with. Then there is a qualifying. So those who are at minimum will have to try and move to qualifying and then to leadership. It is like a levels that you have to achieve. And to determine your level, you will have to undertake a self-assessment and formulate an action plan for improvement. The same code of conduct can be used for site audits where you are with respect to your specific asks that we have. Next. The self-assessment is very comprehensive, and as you see in the environment piece, GHG emissions and energy usage, air emissions, pollution prevention, all of that is factored in, and so on. So it's important to understand that GHG emissions is very important aspect for identifying opportunities for improvement, which will help companies mitigate risk and become more resilient in terms of their own operations. So it's not just a larger company is asking you to do it. It is in your favor to understand how it can help you identify opportunities. So uh, uh, any problem can be looked at in two ways. It's either an opportunity, or it can be looked at like something that you don't want to do. But once you embark on this journey of measurement, monitoring, understanding, and developing your inventory, you will understand that, hey, probably this I should factor this here because I haven't looked at the energy costs in this way before. Next. So that's about it, and I am done. That's my key message. it's important to look at GHG emissions accounting as a mechanism to identify opportunities for your organization's efficiency. Thank you.
Thank you, Dr. Purushottam, for having us through, taking us through the strategy and modalities of engaging with suppliers. This sets the stage well for the rest of the session as we have understood the significance of having a well-established green value chain. We would break for questions after Mr. Shubruta's session once he links the application stated by Dr. Sunita. We would in the next two sessions have hands-on experience and exercises, sorry. And we have also shared the GHG protocol handout with you on the platform, and you could download it from here. Now I would like to introduce Mr. Shubhrata Chakrabarti. He is the Senior Manager with the Climate Program at WRI India. He works extensively on technical review of GHG estimates and methodologies for key economic service sectors, supports the team with Indian states on various sub-national climate mitigation work. He is also involved in various capacity building initiatives based on internationally accepted guidelines and standards. Shubhrata has previously led the GHG abatement projects while working with Indian leading in infrastructure and finance industry and secured technical due diligence for commercialization of carbon credits. He's also worked as a GHG auditor. And with all that knowledge and experience, I hand over to you, Shubhrata, to take us through the concept of GHG accounting and reporting, corporate accounting and reporting. Shubhrata, you'll have to unmute yourself.
Thanks. I was actually struggling with the panel. Thank you, Megha, for the introduction, elaborated introduction. I hope everybody can hear me fine. Let me see if I get. Okay, great. Yes. Okay, let us. After hearing from Varun and Dr. Purushottam, let us take a global perspective as to why nowadays we are talking about the urgency, and we are basically on the brink of missing the opportunity to limit the global warming to 1.5 degrees centigrade. And if we rely on the current climate commitments or pledges that are being made by the countries under Paris Agreement, temperatures can be expected to rise to 3.2 degrees centigrade this century. And the temperatures are already increased by 1.1 degree centigrade. And we can see the devastations that it has, across the globe related to the impacts of the climate change. Now, UNEP emission gap report of 2019 suggests that we are failing. And these three numbers that you see on the slide are basically holding the fate of the world. Now, scientists agree that to get on track to limit the global temperature to 1.5 degrees centigrade, emission must drop rapidly to 25 gigatons of CO2e by 2030. Our challenge is, based on the current commitments, emissions are on track to reach 56 gigatons of CO2e by 2030, which is twice over what they should be. And collectively, if the commitments and the policies and the actions can drive a 7.6% emission reduction every year, then between 2020 and 2030, we can limit global warming to 1.5 degrees centigrade. Now, given this context, climate actions by non-state actors such as businesses, including MSMEs, is becoming increasingly important, And for that, one has to understand its own GHG emission footprint, right? So GHG protocol establishes comprehensive global standardized framework to measure and manage GHG emissions for private and public sector operations, value chains, etc. And the corporate accounting and reporting standards provides the platform for virtually every corporate GHG reporting program in the world. In fact, in 2016, in 92% of Fortune 500 companies responding to CDP used GHG protocol directly or indirectly through a program which is based on the corporate accounting and the reporting standards. So let's talk about certain principles that we need to keep in mind while we move ahead with the reporting accounting and the reporting standard. But before that, maybe we can do an exercise. Okay, so we have this quick poll. GHG accounting and reporting should be based on which of the following principles?
You'll have 30 seconds to answer this question. You can also choose multiple options in the answers provided.
Okay, so the poll results shows that 80% of the audience believe that the transparency is one of the very key important principles, followed by accuracy, and then consistency, relevance, and completeness. Yeah, maybe we can switch back to the slides. Well, we need basically all these five principles. These five principles are very important when we go about greenhouse gas accounting. So what actually we mean by all these five terms. We'll start with the transparency. So activity data, emission sources, emission factors, accounting methodology, all these things require adequate documentation and disclosure to enable verification, which means that this information should be sufficient to allow individuals who are outside the inventory process to use these same information, and they should be able to derive the same results. Any kind of exclusions shall be clearly identified, disclosed, and justified. The reported GHG emissions shall appropriately reflect emissions occurring as a result of activity and the emission patterns, and that's why the part relevance come into the picture. The calculations of the GHG emissions shall not systematically understate or overstate actual GHG emissions. So that's where the accuracy part comes in. So accuracy should be sufficient enough to give decision makers and the public reasonable assurance of the integrity of the reported information. And very important factor is that uncertainty in quantification of the GHG emissions shall be reduced to the extent that is possible and pragmatic. Next is completeness. Now the inventory compiler or the user shall account for all required emission sources within the chosen inventory boundary. Any kind of exclusion of the emission sources shall be justified and clearly explained. The last part is consistency. So emission calculations shall be consistent in approach, in boundary, in methodology, and using these consistent methodologies for calculating GHG emission basically enables companies to they arrive at a meaningful documentation of the emission changes over time. The companies can do trend analysis. They can compare what their emission scenarios look like currently as compared to a previous year, and any kind of deviation from the preferred methodology shall be disclosed and justified. Having said this, there are certain trade-offs when it comes to using these principles when we go about GHG accounting, and it is important to emphasize that completeness should be achieved over accuracy. That is, it is preferable to have a complete report of key economic sectors, key source categories and subcategories, even if accuracy is low, then only the part of the sector reported very accurately. And this should help guide and prioritize effort, and it should also help in identifying the highest emitting sources. If I can give one example, which basically is not related to the corporate sector or the MSME per se, but Kampala, which is a city in Uganda, traded the data accuracy for a broader data set covering all the sectors. And they have used the data from the different sources and years, and they have scaled it up, or they have combined it in order to complete their inventory. So you can see this is one of the examples wherein they have traded accuracy. Now we have covered the main principle part. Let us talk about how we need to go about when it comes to setting the boundaries. So there are two things that we need to bear in mind. There are two types of boundaries basically. One is organizational, and second one is the operational boundary. We'll get into the details of this in coming slides. But now, why should a company or an MSME should bother about the organizational boundaries? Why is it important? You see, business operations vary in their legal and organizational structures. They include wholly owned operations. They might also include incorporated and non-incorporated joint ventures. There could be subsidiaries, franchises, etc., etc. Different kind of business structures. So for the purpose of the financial accounting, they are treated according to the established rules that depends on the structure of the organization and the relationship among the parties that are involved. So in setting the organizational boundary for the GHG accounting, a company should select an approach for consolidating the GHG emissions and then consistently apply that selected approach to define those businesses or the operations that constitute the company for the purpose of accounting and reporting GHG emissions. So organizational boundary basically determines which company operations need to be included in the GHG inventory, what percentage of each operations to include. And I can understand that you might not be having a grasp of what percentage means, but hopefully we will get into that soon in the coming slides. Okay, so when we talk about the consolidation approaches, there are basically, for corporate reporting, there are two distinct approaches that can be used. One is equity share approach and one is control approach. And we will discuss this in greater details. But it is important to note that once the company chooses the approach, that approach need to be consistently applied across entire organization. If the reporting company wholly owns all its operations, its organization is the same, whichever approach is used, and we will understand in the coming slide as to why it happens. But for companies with the joint operations, the organizational boundary and the resulting emissions may differ, depending upon the approach that the company has chosen. Let's talk about the equity share approach. So under this approach, a company accounts for the GHG emissions from the operations according to its share of equity in the operations. And you might see a little bit of alignment with, how we do the financial accounting and stuff. And this has been sort of, if I can say, inspired by that kind of framework. It is obviously independent of financial or operational control. Typically, the share of economic risk and the rewards in an operation is aligned with the company's percentage ownership, of that particular operation, and equity share will normally be the same as the ownership percentage. But there are cases, where it is not the case, which means that the percentage ownership is not equivalent to the equity share. And in those cases, the economic substance of the relationship the company has with the operation always overrides the legal ownership form to ensure that equity share reflects the percentage of economic interest. So let us try and understand it with an example. Okay, let us consider that there is a company who has a 50% equity share in a factory A, and the emission is 1,000 metric tons of CO2 per year for a particular year. So if the company chooses the equity approach, then the emission will be as per the equity. It means that it will account for only 500 metric tons of CO2 per year. Similarly, if the company has 85% equity in another factory which has 1,000 metric tons of CO2 emission per year, then it will account for 850 tons of CO2. It means that it will basically depend on the equity share that I just spoke about. Control approach. So under this approach, a company accounts for 100% of the emissions, 100% of the GHG emissions from operations over which it has control. It does not account for GHG emissions from the operations in which it owns an interest but has no control, right? And we'll understand what this control word means. But the control further divided into two parts. One is financial control and another one is operational control. Financial control. So the company has financial control over the operation if the company has the ability to direct the financial and operational policies. I'm repeating again, direct the financial and the operational policies with a view to gain economic benefits from its activities. Again, obviously, it accounts for 100% of the emissions from the operations under the financial control. But typically, the share under this approach, basically, the economic substance of the relationship between the company and the operation take precedence over the legal ownership status. Let us understand this with an example. So say, for example, there's a company which has a financial control over factory A, and the emission is 800 metric ton of CO2 per year. Now, as per if the company chooses, the reporting company chooses the financial control approach, then according to that, it will account for 800 metric tons of CO2 while reporting its GHG emissions. But if it does not have a financial control over another factory B, then it will not account for any emissions from factory B while reporting for the GHG emissions. Operational control. So a company has an operational control over operations if the company has the full authority to introduce and implement its operational policies at the operation. And again, if we can understand it by an example, if the company has an operational control, then it will obviously account for the entire emissions. But if the reporting company does not have, then it will not account for any kind of emissions while reporting its GHG emissions. Okay. There are a few points that we need to bear in mind going forward. When we talk about having an operational control, it does not necessarily mean that the company has authority to make all decisions concerning an operation. For example, the big capital investment firms, they might have joint financial control, so they would require approvals from all the partners if they want to make any sort of changes. Similarly, sometime a company have a joint financial control over an operation but not operational control. In such cases, the inventory compiler will have to dig a little deep, and they have to understand the contractual agreement to understand the authority over the operations. This slide again basically shows certain categories and certain definitions and what kind of an approach they take and what will happen. So for group companies and subsidiaries, this basically includes incorporated and non-incorporated joint ventures and partnerships over which the parent company has the financial control. And here the parent company is reporting GHG emissions. So we see it from the parent company point of view. And the group companies and subsidiaries are fully consolidated, which means that 100% of subsidiaries income, expenses, assets, liabilities, etc., are taken into parent company's profit and loss account or balance sheet. So in that case, if the company, the reporting company or the parent company chooses to go by the equity share approach, then they report as per their equity share with the group companies or the subsidiaries. But if they chooses to go for the financial control, then they will have to account for 100% of the GHG emissions. Similarly, for the associated or affiliated companies, that again includes incorporated and non-incorporated joint ventures and partnerships. Here, the parent company has a significant influence over the operations and the financial policies of the company, but does not have the financial control. So where it does not have a financial control, and if the reporting company goes by the financial control, the emissions is zero. But if it goes by the equity share, then it depends on what is their equity share with that affiliated or associated company, and they will report their GHG emissions as per the percentage. Franchises are the separate legal entities. In most cases, franchisor will not have equity right or control over franchisee. However, if the equity right or the control exists, the same rule applies. That applies for the group companies or the subsidiaries. In case of fixed asset investments, the parent company has neither significant influence nor financial control, and this category also includes JVs and the partnerships over which parent company does not have significant influence. And the financial accounting basically applies cost dividend method to fixed asset investment. Therefore, doesn't matter which approach you choose, you do not report your GHG emissions for the fixed asset investment. All right, so time exercise 2. I hope I'm not too fast.
You are not too fast, but the time is kind of you're taking a little longer. So there aren't too many questions. So maybe you can use 5 more minutes for your topic.
I'll try to cover as much as possible.
Okay, so 5 more minutes for that then.
Okay, so are we skipping the exercise or we are doing it?
I think we can skip the exercise. What do you think, Tejaswini?
I think we can do one question right now, and then we'll skip the other two that were planned.
Okay, then let's go ahead. All right, so this is an hypothetical situation where company ABC has full control of operations A, B, and 30% non-operated equity control over a company C. Now, ABC's boundary, when we talk about from the operational control point of view, is, I guess you will have 30 seconds to sort of think and answer. Thank you. Okay, I guess 67% have voted for the option B, and 25% says that it should be option A, and 9% says all emission of A, B, and C. Now, company A, B, C has full control of operations. Full control of operations. So A, B, and C, if we are going from the operational control point of view, I think it will go for operational control for A and B, the emissions of A and B. But if you want to sort of include C, if we consider both the approaches, what should be, then probably it should be option B. Anyways, well, let's go ahead with the presentation. I have 5 more minutes. So we have spoken about the organizational boundaries. Let us quickly speak. Go ahead with the operational boundaries. After setting the organizational boundary in terms of operations that is owned or controlled, it is the company basically goes for setting the operational boundary, which involves identifying emissions associated with its operations and categorizing them as direct and indirect emissions, and choosing the scope of accounting and reporting of indirect emissions. So the slide, the picture that you can see on the slide basically provides you with a brief snapshot hypothetical situation of operational and the organizational boundary. Let us talk about the direct and indirect emissions. And it's pretty plain and simple. So direct emissions basically refers to the GHG emissions from the sources that is owned and controlled by the reporting company. And indirect emissions are basically those emissions that are consequence of the activities of the reporting company, but occurs at the source owned and controlled by another company. So, for example, you are having your factory, and then you are drawing in, electricity from the power plant, or you have this, maintenance service from another company. So the direct emission basically is related to your factory, and the indirect emissions is basically any emissions other than the direct emissions. So scope 1 emissions, some examples like electricity generation or physical or chemical processing, etc. And when it comes to reporting requirement, the scope 1 emissions are required to be reported. So basically, this is your scope 1 emissions, the direct emissions that is coming out of your factory. This is just an hypothetical example, by the way. Scope 2 basically refers to purchased electricity, steam, heating, and cooling. Again, in Indian context, probably we do not really talk about the purchased steam or heating and cooling, but yes, purchased electricity. So for office-based businesses, scope 2 emissions is usually most significant, and the inclusion in the GHG inventory while reporting for the GHG emissions is required. So your scope 2 emission is basically the electricity that you purchase from the grid. Scope 3 emissions are basically those emissions which are not scope 1 and scope 2. And the example that I have already given earlier as well, transport in vehicles that are not owned or controlled by the reporting company. And when it comes to reporting, it's optional. So the indirect emissions that is coming out of the vehicle is basically the scope 3 emissions. To give you the full spectrum of the entire emission gamut that I just spoke about, and categorizing it based on the scope 1, scope 2, and scope 3 emissions, you can see in the picture. Scope 1 basically refers to the emissions happening in your chosen boundary. Scope 2 is obviously purchased electricity, and scope 3 refers to the upstream and the downstream activities. And there is a detailed guidance on how you can go about accounting for the scope 3 emissions, but we're not going into details for that particular standard today. Let me just keep.
Sorry, Subrata, to interrupt you. I think some of the participants wanted the exercises to happen. So we will
Okay.
keep shorter time for the exercises. So we can
Yeah,
go
yeah,
back to
please
the
go ahead.
previous. Yeah. So I'm
You
launching.
can launch the poll. Yeah.
Yeah. So you'll have 30 seconds to answer this question.
Okay, I guess we can go back. Yeah, majority of the folks have got it right. So maybe we can go ahead. We report on all the 7 greenhouse gases. Okay, so while determining the scope, it is important to understand this, that we do not really determine the scope on the basis of the type of emission sources, but it is being determined by the ownership or the control of the emission sources. So what I mean by this is basically, if this is it basically depends on the reporting company. If the reporting company is a electricity generating company, then for it, all the fuel consumption will be reported under the scope 1 by that particular reporting company. But if the reporting company is a different company and its main business is not energy generation, it is just drawing electricity from this particular uh, plant, then it will account the emissions under scope 2. Okay, exercise 4, 30 seconds perhaps. It's a relatively easy poll question. Okay, can we see the results? All right, okay, so 78% believe it's a scope 2 emissions. Absolutely correct. All right, so let's quickly talk about how do you track emissions over time once you have figured out your organizational and the operational boundary. Quickly, base year is basically a term that is used in GHG accounting, and it's basically a reference point in the past with which your current emissions can be compared. And what I mean is basically, as you can see in the slide, if I have these emission figures for a certain period of time for a particular company, I can totally understand that if my base year is 2016, so in 2019, probably there's an increase of 21% of emissions over the base year. Choosing a base year is very important factor, and we need to select the earliest year for which verifiable emission data for the required scopes is available. So by required scopes, I mean scope 1 and scope 2. We need to also specify why we are choosing that particular year as a base year. There might be a certain situation where the emissions dramatically fluctuates, and it basically happens for the companies who have lot of acquisitions and mergers going on. In that case, you can take a series of consecutive years as your base year. The average, basically, the corporate accounting and reporting standard does not provide any kind of thumb rule for it, but 2 to 3 years of time should be enough. Okay, due to some reasons, okay. All right. Recalculating base year is an important thing, and companies often undergo significant structural changes, acquisitions, divestment, mergers that I just mentioned, and these changes will alter companies' historic emission profile, making meaningful comparisons over time difficult. So we need to recalculate the base year once that kind of thing happens. the reporting company should also develop a recalculation policy, and it should be applied in a consistent manner and should be articulated very clearly and transparently while reporting for the GHG emissions. We recalculate base year GHG emissions for significant changes in the structure of the organizations, significant changes in the calculation methodology, and during the calculation, if we discover that there are certain significant errors or the small errors that happened over the period of time and collectively are significant. Significant threshold is basically it's basically a qualitative or quantitative criteria that is used to determine whether whether a change is significant enough to warrant the recalculations. And we need to take into consideration the cumulative effect of the small acquisitions or divestments. There is again no thumb rule given by the corporate accounting and reporting standard, but normally people go for 5% on 10% threshold. Structural changes basically refers to the transfer of ownership or control of emitting activities from one company and the other, which I have already discussed. I'm not going to get into too much of a detail of this. Time for one exercise.
Is this the closing? Because we'll close after this exercise for the session.
Yeah, we can do that.
Okay.
I'm actually done with the slides, I guess.
Arun, can you show the answer?
Okay, great. I guess majority of the folks have got the answer right. It's all of the above. So yeah, with that, I can pass it on to Megha. Megha, you can take over, and thank you for the opportunity. I'll be happy to answer any questions if you have.
Thank you, Shubrata, for a detailed overview on the standards and basic accounting record concepts. I would skip the Q&A right now that we have, and you can still type in your questions and we'll try to address them through either sending it as chat boxes to you or to the speakers. Thank you, Tejaswini, Dr. Sunita, for the previous session. We will now take the rest of the questions later. And to unfold the story of tracking your company emissions, I would now like to call Mr. Atiq Sheikh, counselor at CII Godrej Green Building Center, a certified energy auditor and certified expert in climate and renewable energy finance. Atiq has over 7 years of experience with advising international and national clients for energy management, resource efficiency performance, and data to identify improvement opportunities. He has also worked on introducing many innovative concepts in the Indian industries such as economic industrial parks, resource efficiency, and cleaner production, green ports, material flow chart accounting, etc. Atiq will guide us on calculating a GHG inventory by explaining emission quantification, data collection, and process. He will take us through some calculations to make it easier to understand and implement it practically. Thank you for joining us, Atiq, today. May I please request you to unmute yourself? Okay.
I hope I'm audible and clear to all of you.
Yes.
Can you confirm? Yeah, okay, yeah. Okay.
Yes, I think you also have control of the slides, okay?
Yeah. Okay, so in two previous sessions, we saw why MSMEs should start calculating the GHG emissions as they are part of a bigger value chain. And then in the previous session, we saw the basic principles on if you want to start your GHG accounting, what are the things you should take care of, like setting organizational boundary, what sort of control you have on the emission sources, and then what are scope 1, 2 emissions. But now for this session, I will be covering in detail like how to identify the emission sources. Suppose if you are having an MSME or an industry, then how you will identify what are the major emission sources from your organization. So you start accounting emissions from those sources, that we will see. In the second part of my presentation, once we identify the emission sources, we need to calculate the emissions. So we will see how the emissions are to be calculated. Usually, the companies use Excel-based tool or some standards tool which are available for certain sectors. But I will be giving some basic understanding on what are the methods to calculate the emissions, and then subsequently, once you start practicing your GHG accounting, then you can use the Excel tools also. This is taking time for the slide changing. Yeah, so as highlighted by Subrata, that the greenhouse gases which are primarily covered during our GHG accounting are the 7 gases: carbon dioxide, methane, nitrous oxide, and some other gases which are refrigerant based or process related GHG emissions. So primarily, if we talk about greenhouse gas inventory or accounting, we try to estimate the quantity of these gases which are getting emitted because of our operations into the atmosphere. So, sorry. Yeah. So if we talk about the 6 gases, the carbon dioxide, which is one of the major greenhouse gases, the primary sources of CO2 are basically fossil fuel combustion like coal, then crude oil, and some basic, I would say, emissions during the transportation of coal or mining of coal. That time we will see the carbon dioxide emissions. The second major greenhouse gas contributor or global warming contributor is methane, which is primarily from the agriculture sector, where we see a lot of rice cultivation. So that is a major emission source for methane. And then whenever we dispose our waste into landfill because of the anaerobic condition, methane emissions are there. And then some emissions during the natural gas transportation in pipelines or during the natural gas extraction process. The third major contributor is nitrous oxide, which is primarily the contributors are furnaces where we see a very high temperature combustion, like in range of above 800 degrees Celsius, where the nitrogen in the air will convert into N2. That is one of the major contributors. And in addition to that, when we apply nitrogenous fertilizer in agriculture sector, that time also we see some amount of nitrous oxide emissions. So these are the 3 gases which are part of major contributor to greenhouse gas or global warming, I would say. And then the other 4 gases which are HFCs is primarily the series of refrigerants like R134A, R122. So all these refrigerants, whenever it gets leaked into the atmosphere, in a way they will contribute to global warming. Then the other type of greenhouse gas is perfluorocarbon, which is primarily we see in aluminium smelters, where during the smelting process of bauxite to aluminium, that time we see this perfluorocarbon emissions from smelters. Then sulfur hexafluoride, basically it is used in electrical system where we see high voltage circuit breakers, which are SF6 type. So whenever we use such type of circuit breakers, the SF6 get released into the atmosphere, and then we have to account it accordingly. The last gas which has been recently included in our greenhouse gas accounting is NF3 or nitrogen trifluoride, which is used in microelectronics for etching process. So in manufacturing of solar panels, LCD, and some other circuit board components, we see the emissions pertaining to NF3. So as Subrata highlighted, like in a company, there are various emission sources. Like this example, which we are seeing for a small MSME, we see that MSME within their operation, they use boiler, refrigerant in air conditioners, some LPG in welding, canteen, etc. They use, and also they buy electricity from the grid, and then they use some third-party transport for raw material receipts or product dispatch, and employees also commute using their own vehicles or public transport. So all this are like emissions which are happening because of your company's existence. So it is important for us to account such emissions. So what we do usually is that whenever we start a GHG accounting, we first try to identify the emission sources. So I will just explain the 3 thumb rules which is you can use to estimate the GHG emissions. So this is an example of a car manufacturing company. Now, if I talk about car manufacturing company, there can be multiple sources, right from raw material procurement, then manufacturing, assembly, all those things are there. So if you're doing an inventory, this principle you can apply in your own company also. The first thumb rule is that for any sources where there is a fuel combustion, there is a major GHG emission sources. So in a car manufacturing company, if I talk about fuel combustion, coal or gas consumption in boiler, gas consumption in paint house, heat treatment furnace, canteen, then acetylene used in cutting or welding. So these are all, I would say, fuel which is carbon primarily, and then it is combusted to get the heat, and the waste, or I would say the emissions which are generated because of it, is CO2. So that is first thumb rule. So whenever you identify or you want to identify the emission sources, you should look for fuel combustion. So that will classify as a emissions there. Then second type of emission you should identify is wherever there is a GHG use. Now, if you see the fuel combustion, we are using some fuel like coal or diesel and converting into heat, and byproduct we are getting is CO2. Now, there are certain applications where GHGs are used. For example, refrigerant, R134A or R122, another series of refrigerant are primarily used in our chillers or split air conditioners. Now, whenever they are leaked into the atmosphere, we refill it so that the necessary performance of the system is continued. So when it is getting leaked into the atmosphere, it means that we are releasing GHG in our atmosphere. So that you need to account. So some of the example where GHG is used in our industry is refill of refrigerant, that is one type. Then refill of fire extinguisher also, like CO2 type fire extinguisher, which we extensively use in industry, is an example where GHG is used. So for these two sources, whenever there is a refill, that time only we need to account it. The other example of GHG usage is sulfur hexafluoride type of circuit breakers. So this is example of wherever there is a GHG usage. The third example, or I would say thumb rule to identify the emission sources, is process emissions. Now, this process emissions is specific to certain sectors only. Not all industries will have process emissions. Okay, to give you an example, what is process emission? I will take an example of cement sector. In cement sector, what happens is that limestone is a basic raw material. Now, this limestone, it passes through a kiln or a circular reactor, I would say, where the limestone is heated at a very high temperature and coal is used as a primary source of energy. So for coal-related emissions, you're already accounting in fuel combustion. But what happens in process emission is that limestone, if you see, which is basically CaCO3, which is calcium carbonate. Now this calcium carbonate, in a high temperature condition, it will go reaction and it will form lime, CaO. And as a, I would say there will be emission, which is CO2. So this CO2 emission, which I'm talking about, is because of a raw material type. For example, in an iron and steel sector, we use iron ore, which is Fe2O3. Now this Fe2O3 reacts with a carbon or coke, and we will get iron, and CO2 is getting emitted into the atmosphere. This emission is additional to fuel combustion, and it's called as a process emission. Right now in automobile company, there are no specific process emissions, but if I talk about sectors such as fertilizer, cement, glass, wherever there is a high carbonate usage or where we see a reduction using a carbon, that time we will see the process emissions. And other emissions are like electricity consumption from grid, and then some indirect emissions which you are talking about are related to raw material receipts or car dispatch to dealers, employee commute. Similarly, for your company also, you need to do this step once you set the boundary and want to identify the emission sources. Now, we have identified the emission sources happening from a company's operation. So in an MSME, we will be using coal, diesel. So whatever we are using, those are the emission sources. Now, these emission sources have to be converted into CO2. Because when we do GHG accounting, we do not go and measure what is the CO2 emission with some equipment. It is basically the mathematical formulas and some calculations we will use to estimate the CO2 emissions. So, as we have discussed scope 1, 2, and 3, just I will explain, like, these are some of the sectors where we see scope 1, 2, 3 distribution share, like any industry where we see a very energy intensive sector, there the scope 1 emissions will be on the higher side. And for example, if we talk about e-commerce industry where they rely primarily on transportation and other things, there we will see the higher scope 3 share. But for example, in an IT company, we see that electricity buying from grid is a major emission sources, and scope 1 because of refrigerant and other things are there, which is very less. And scope 3 maybe because of the employee commute, business commute, we see scope 3 on the higher side. Now we will go into the detail on how GHG calculation is been done. So I hope I'm clear on how to identify the GHG emission sources. So we identified, for example, coal consumption in boiler, diesel consumption in DG sets. These are all the emission sources which you have identified. Now we have to calculate how much emissions are happening from this emission sources. So basically, if we talk about, if you want to calculate an emission or how much CO2 is getting emitted into atmosphere from any emission sources, we use this simple formula. First, we will collect an activity data. For example, if I talk about boiler, so coal consumption in a boiler is an activity data. Diesel consumption in a DG set is an activity data. Electricity consumption from grid is an activity data. So this data for each emission sources we will collect. We will multiply this activity data into the emission factor, which are, I would say, a standard number. Like if you are consuming 1 liter of diesel, how much CO2 is getting emitted into the atmosphere? If you are consuming 1 unit of electricity, how much CO2 is getting emitted into the atmosphere? So these are called as an emission factor for per unit of diesel, fuel, electricity, or any material, how much CO2 is getting emitted into the atmosphere. So that is called as emission factor. Now, this emission factor, it may be for methane or N2O. So what we do is that we use certain conversion factor, which we call it as a global warming potential. I will go in detail what is GWP, how it is calculated in my subsequent slides. But for this slide, for an understanding, if there is methane, N2O, SF6, which is being used, and if you want to convert into equivalent of CO2, we use the global warming potential. And then for all the emission sources, you do this similar approach like diesel consumption, coal consumption, refrigerant consumption. Similar method you will do for all, and then you will add all the carbon dioxide emissions and you will get a total number, like from your company's operation, this much amount of CO2 is getting emitted. Now, in our previous session and last training series, we explained like GHG emissions has to be done on annual basis. So all this activity data which you will be collecting will be basically annual data. How much diesel consumption annually you are having, how much electricity consumption annually you are having. So all this we will use and try to calculate the annual emissions. So some of the examples of activity data are the liters of fuel consumed, kilowatt hours of electricity consumed. So whichever data can be easily converted into CO2 is activity data. Now, for example, hours of time operated in case of some equipment like excavators, or that time we can take this hours of time. But primarily we use liters of fuel consumed, kg of coal consumed, kilowatt of electricity consumed as a activity data for estimating the emissions from any emission sources. So this is a small exercise which we have included here. We will see in the subsequent slide on what are the activity data and which you should collect for. Now, when you're doing the data collection, you should primarily use two types of data. One is primary, where we try to collect the data available from companies' activity like annual reports, or we reach out to the suppliers to get specific data and try to estimate. And in certain cases where there is no specific data available, we try to collect it from the industry average number. So many companies, when we do GHG accounting, they use the combination of primary and secondary data. Now, when you are collecting the activity data, we have to take care of certain things like technological representativeness. Like in your plant, there may be different type of vehicles which use fuel like petrol or diesel. So we will have to consider those factors also while collecting the data. That is one aspect. Then temporal representative, whether the time which we are considering for an accounting, whether it is annual basis or monthly basis. So suppose if you are collecting monthly data, then for annual estimation, you will have to multiply it with 12, which is number of months. So that way we will have to ensure the representativeness in terms of timeline also. Then geographical representative, like for example, we collect a data for a company in India, and we use single emission factor. But suppose if you're collecting a data for another company in a different country, then we will have to ensure for that part also. Then completeness and reliability are very important aspect when you're collecting the data for activity.
I think
Now,
these are the last 5 minutes for your presentation.
Sure, yeah. So if I talk about scope and data sources, we have where we can collect the data from purchase receipts, ERP records, fuel logbooks, ledgers, safety records, and meters, from where we can get the data in terms of liters of fuel consumed or kg of coal, etc. Then if I talk about data sources for scope 2, which is electricity, primarily we collect it from the electricity bill, but very large companies, they rely on the meter data also, online metering, logbooks, from where we can collect the data for scope 2. Then if I talk about scope 3 data sources, we collect primarily from suppliers, material receipts, product dispatch, transporter, or the logistic service provider, where we can get the distance data. Then customer, sometime if you are doing a product carbon footprint, how much is the use for the product, that also we need to collect from customers if you are including that in our inventory. So data collection, definitely, as when we do accounting, it has to be done in coordination with different departments, because one data is maintained by energy department, one data is maintained by HR department for employee commute, business commute. So it's a well coordinated activity, and it is suggested that GHG collection, data collection systems should be implemented in the industry once they start doing the GHG accounting. Should we do the exercise, Megha, now, or afterwards we can do it?
We can do it in the end, all the questions.
Okay, sure. So we have discussed on the activity data. The second important factor in our GHG activity or GHG calculation is on the emission factors. So whatever activity data we are collecting, to convert into CO2, we use emission factors. Now, it's a metric where, like as I discussed, like 1 liter of diesel, if you're using, how much CO2 is getting emitted. 1 kg of coal you're using, how much CO2 is getting emitted. So all those emission factors we try to collect and convert into activity data, multiply with the activity and estimate the emissions. So when you are doing a GHG inventory and you go for searching GHG emission factors, there are primarily 3 types of emission factors which are available. First is tier 1, where we call it as a global level emission factors. Tier 2 is national, where I talk about India specific emission factors, and tier 3 is plant specific or site specific emission factors, which we try to estimate. Now, depending on the emission sources or the activity data, you can decide which one you should go for, and you should consider why, where the national data is to be considered and where site specific data is to be considered. For example, in tier 1 data set, we primarily rely on IPCC data sets, where they have given for all the fuels what is the CO2 emissions, lower and upper limit, what is the default emission factors, but these are all based on NCV or the energy content of the fuel. So we can use the density and other aspect and try to convert into kg CO2 per liter of fuel or per kg of fuel that we can estimate. Then tier 2 are country specific emission factors. For example, in India, we have grid emission factors, where India specific grid emission factors are regularly released by Central Electricity Authority, where we try to see, like every year, how a grid mix is changing, and then we see the emission factors which we use to convert our electricity consumption into emissions. Then tier 3 are site specific, where large companies like thermal power plants or fertilizer sector, where even a 1% data can have a significant impact on your emissions, they try to estimate the percentage or site specific emission factors. So for example, in power plant, they have ultimate analysis run for coal every time, where they get percentage carbon. So they estimate their own emissions accurately and try to estimate the emissions happening from coal combustion. So this is one example where you can see afterwards, like if I taking tier 1 data emission factor for coal consumption in the site, and if I calculate tier 3 with help of ultimate data, ultimate analysis of coal, we can see that the emissions are at least 1 to 2% getting affected in overall comparison if you do the 2 approaches here. So last aspect of GHG emission calculation is on the global warming potential. As I indicated in my previous slide, whenever you do a GHG accounting, you will have multiple gases like methane, CO, then nitrous oxide. Now, when a company report a GHG number, they will report in a single metric, which is carbon dioxide equivalent. Now, suppose if company is reporting 1 ton of methane, 10 tons of N2O, 100 tons of CO2, if I talk about total number or key performance indicator, it is difficult to arrive. So for the simplicity basis, what scientists have done is that they have defined for each gases what is the global warming potential. Now, this global warming potential is calculated keeping in mind that CO2 is a basis. So they define CO2, carbon dioxide as a basis, and they say that if I'm emitting 1 kg of methane in atmosphere, it is equivalent to emitting 28 kg of CO2. So it means that methane is having 28 times more heat trapping capacity than compared to carbon dioxide. Now this 28 number or the global warming potential is calculated considering the lifetime of the gases, what is the radiative forcing, all these aspects are considered, and then based on that, they calculate the global warming potential. I will repeat again. Global warming potential in simple terms is nothing but a comparative number where we can say that any gas or greenhouse gases is how much times more potent as compared to CO2. So for example, nitrous oxide is having 265 times more heat trapping capacity than CO2. So if you're emitting 1 kg of nitrous oxide, it is equivalent to emitting 265 kg of CO2. So whenever you are estimating methane, nitrous oxide and other gases, you multiply with this global warming potential and try to estimate one number, which is carbon dioxide equivalent for overall inventory. So this is a simple calculation which I have included here. A diesel generator is consuming 175 lakh liter of diesel in a month to provide a power backup. Now, if you want to calculate emissions by this diesel consumption, we use the activity data, which is 175 kiloliter. We multiply it with the emission factor, 2.64 tons of CO2. But here, as it is CO2, we are not multiplying with any GWP for other gases. The GWP for CO2 is 1, so into 1, and we will get the total emissions, which is 462 tons of CO2 equivalent emissions happening from DG set usage. So GHG data collection, whenever you are starting a GHG accounting, it is suggested that you use a simple Excel sheet and online form database to collect the data. But once you become mature and you want to utilize GHG accounting system and it becomes a more strategic area for your business to focus, you can implement certain data management system where all the data can be collected in a single place and be converted into CO2 accounting. So this is one example which I have included for Tata Motors. They have identified, like as a first step, what is emission sources of scope 1, scope 2, scope 3. So it is indicated here: manufacturing operations, electricity purchase, purchase goods and services, then vehicle used by the customers. So all those things are identified, and then they have estimated their emissions. So this is their scope 1 and 2 emissions, where they have given for last 3 years what is scope 1 and scope 2. And then scope 3 they are reporting separately here, and this is the absolute number which they are reporting, and then they are dividing it with by equivalent vehicle to estimate, like if Tata Motors is producing 1 unit of vehicle, how much emissions are happening in the atmosphere only with respect to scope 1 and 2. So these are some of the links which I have given here. This is a simple SME tool which was prepared in collaboration with WRI and TERI as part of India GHG program. So you can use this tool to estimate emissions from your operations. So it is primarily for MSME. And then there are some sector specific tools like cement, iron and steel, aluminium, paper. So all those you can refer from this GHG protocol website. So with this, I will end my presentation now. And over to you, Megha, for exercise if you have time.
Okay, so I was thinking that we could finish with the speakers talking and then have the Q&A and also do your exercises at the end. Maybe
Sure.
we'll have to give 10 minutes for that.
Sure.
Also, Atik does have a case study. If there are participants who are willing to do it at the end, we could do that, or he can send it later as we send the recording. That was very well explained, Atik. Thank you. And I will just ask Tejaswini to take 1 or 2 questions if they are connecting to the next sessions. Are there any, Tejaswini?
I mean, I haven't got any right now.
Okay.
We can go ahead with the next.
Thank you. So I'll introduce you to our next speaker, who is now going to talk about the concepts and calculations and how those concepts and calculations have been put into system. He is the chairman and managing director of Kotle Engineering Private Limited, Mr. Sirish Kotle, with 43 years of experience in the industry. Kotle Engineering Private Limited operation has operations over like more than 65 professionals with in its operations, and the company's annual sales turnover during 2019-20 was around 21 crores. Under Mr. Kotle's leadership, the company is proud to be among the first 3 MSMEs throughout the country to apply for CII Green Co rating, and has also received CII Small Medium Businesses Star Icon recognition for sustainable performance excellence of the company on the basis of business results, operational results, consumer results, and people's results. Since the inception, they are key suppliers of sheet metal components sub-assemblies to Godrej and Boyce and Lucas TVS Limited. Mr. Kotle has been a very proactive member as well as a president of Manufacturing Associations of Satara since 1987. He has raised, helped, and succeeded in solving various issues faced by industry MSMEs and organized programs to increase awareness about the industrial safety, pollution control, and ethics and values in business. We are glad that you could join us today, sir. We would love to hear your enriched experience and recommendations for other MSMEs on how undertaking GHG inventorization has added value to your company. And because of short of time, can I please request you to stick to 15 minutes? Sir, can you please unmute yourself by clicking on the red mic to make it green?
Thank you, Meghna, for a nice introduction. My name is Kutale Engineering, not Kutle. Good afternoon, ladies and gentlemen. I'm very happy to be part of this event related to environment. Next. It gives me immense pleasure to share our learning of carbon footprint GHG study at Kutale Engineering with the help of Saurabh Godrej Green Business Center with support of UNIDO. We are located in Satara near Pune in Maharashtra. Ours is a young and dynamic team of average age of 35 years, and 30% of our workforce comprises of women employees, thus maintaining gender diversity. Garden green outside and hospital clean inside is our motto. Company is QMS, EMS, and Greenco Platinum rated. We are manufacturers of sheet metal pressed form tubular fabricated components and assemblies for refrigerators, washing machines, ACs, vending machines, home furniture, beds, desking, and automotive, etc. with conveyorized powder coating, ROHS, zinc plating, inspection, testing, ETP, and allied facilities. Next. As Godrej Appliances, Godrej Interior, Godrej Prima, and Lucas TVS are our main customers. Next. Every year, company has been able to achieve various milestones at national level as shown in this journey, which is continuing. Next. We at Kutale Engineering thank CII, especially Saurabh Godrej Green Business Center, Hyderabad, and CII Center of Excellence for Competitiveness, Chandigarh, Pune, Mumbai, Delhi, Godrej Interior, Godrej Appliances for their continuous mentoring, constant encouragement, and prompt support throughout our journey. Next. With constant motivation of all these and support from our customer. We have been part of CII through various manufacturing excellence activities since 2010, and same is ongoing with ZD cluster, which is going on at present. All these journeys have helped us understand the importance of training. Hence, for sustenance, learning, unlearning, and relearning is a continuous process in our organization. And in this context, in 2015, our company has gone for this carbon footprint study prior to our Greenco journey. Next. How green is your company? The question came to my mind. Several companies have taken proactive initiatives to integrate environmental concerns in their business and have improved their environmental performance and business competitiveness. In the pursuit of going green, Kutala Engineering and Synergy Engineers and Powder Coaters, our associate concern, have taken several initiatives, and this has resulted in substantial tangible and intangible benefits, and thus the journey started. Next. As most of the people in industry know, the great Mr. Taichi Ono taught us to reduce order to cash timeline. Lean is a philosophy that seeks to eliminate waste in all aspects of firm's production activities. Muda Muri Mura technique opened our eyes in real sense during our lean journey. We can now see 8 types of waste, not only 7. 7 learned during lean journey and 1 during zero effect journey, green journey. Wastes in resources are always ignored by the entrepreneur. However, we have also addressed this green aspect in our Greenco journey. Next. We are always concerned about impending impact on environment and phenomenon of climate change. Inspiration from Gandhiji's thoughts on environment, making awareness, motivation of customer Godrej appliances and Godrej Interior, and emulation of their good and green practices, compliance of ISO 14000 EMS certification, and fulfillment of management programs, optimal use of natural resources, and better emission and discharge standards. Learning of CI lean cluster journey, all these have inspired us to go for GHG accounting and Greenco journey. Next. We have made green vision, we have signed green purchase policies, and also pledged energy conservation. Next. GHG accounting is a very simple procedure of recording data of consumption of various consumables and travels details related to business. All 3 scopes, direct, indirect, and other indirect GHG emissions are being accounted, monitored, improved on monitored on regular basis. Next. You can see these P charts which show reduction of trend of emissions in the year from 2013-14 to 2019-20. So there is a reduction because of our various initiatives of reduction of GHGs. Next. It was a great learning. We learned the factors affecting GHG and various ways to reduce consumption of natural resources, leading to low carbon operations in all above areas. Our focus areas remained energy, fuel, renewable energy, supply chain management, logistics, and travel. Next. We have listed out many projects which have helped us reduce GHG emissions. We have installed CO2 argon building machines, monitored daily of company-owned vehicles, introduced milk run concept, placement of transparent sheets and air ventilators on rooftop, replacement of CFL to LED lights, procurement of cut to size raw materials so that shearing and other machines machining consuming energy operations are saved, installation of VFDs on various machines above 5 HP, installation of APFC panel, use of transvector guns, because many small scale industries, transvector guns are not used, conventional guns are used, which consume a lot of compressed air and consumes energy. Selection of local suppliers for bought out material, using full capacity of vehicle for transportation of finished goods, etc. All this have helped us reduce GHG emissions. Next. Similarly, we have started using, we have made pallets such that maximum area of vehicles are covered within the specified weight, so that we can start utilizing maximum space, and vehicle number of trips were also reduced. Next. We monitor dashboard with productivity, quality, cost, deliveries, safety, morale, and environment, and maintain 16 performance monitor indices. We are already having best practices at our units, various initiatives on reduction in specific energy, monitoring of energy consumption, substantial reduction in specific energy consumption, good awareness creation programs, energy efficiency operational practices, 5S, My Machine, preventive maintenance concepts are being used. Next. To be amongst first 3 MSMEs to apply and foremost to get CII Greenco Platinum rating throughout the country was a very prestigious moment for us. These are some of the initiatives for zero effect taken during our CII Greenco Platinum journey for energy, water, and raw material conservation. Panchatatvas: replacement of reciprocating compressor with screw compressor, VFDs, IE3 class energy efficient motors, installation of rooftop solar systems, etc. are few initiatives which are taken during this journey. Next. Transparent roof sheets, roof ventilators, APFC panel, aluminum trolleys instead of MS for powder coating baking, usage of raw material in coils, strips, and CTS and CTL instead of standard sheets, saving energy in shearing of material to the sides. You can see various photos shown before and after in the slide. Next. Usage of cut to size coil strips and raw material, revisiting strip layouts for material conservation helped us reduce scrap percentage drastically, saved substantial amount of money too. This is this also helped us in reducing electrical consumption as well as started saving on scrap. Next. Water conservation, rainwater harvesting, drip sprinkler irrigation, ETP plant, usage of water aerators are another few more initiatives for water saving also taken at our plant. Next. We have standard work practices for collection, segregation, storage, and disposal of waste generated in the plant. Next. All these green initiatives have helped us reduce hazardous and non-hazardous waste year on year. You can see the percentage of reduction in various waste, hazardous waste and non-hazardous waste getting generated in our plant. Next. We have also made for green supply chain, we have made purchase guidelines. You can see use of energy efficient products, supplier localization, transportation optimization, toxicity reduction, environment friendly packaging, supplier awareness. All these activities are done under this green supply chain. Next. Instead of procuring catalog machine, we now ask manufacturer to customize the machine which suits to our process as well as product. Catalog machine had 7 HP motor, whereas our product needed 5 HP motor. So we have asked prepared 5 HP motor, and thus we have made our machines lean. Next. Similarly, usage of inverter-based welding machines, servo-based press brakes, transmitter guns. For elimination of stationery and other things, we have started using all, office stationery reductions. Also, initiatives taken at our plant. In ERP implementation is done. Next. These are supply chain intensity reduction projects we have done: milk run, localization of suppliers, reduction in packaging material, transport optimization, toxicity reduction, awareness creation. This has maintained buffer penetration reports, 100% daily schedule adherence, and it has helped. Next. These are the various ways we could use recyclable packaging material. So a lot of wastage of packing material is achieved. Next. We have now introduced PP caps instead of corrugated cap packing, so that these caps can be recycled, and a lot of saving of corrugated and scrap generation is reduced. Next. We are member of Maharashtra Enviro Power for common hazardous waste treatment, storage and disposal facility. All our plating and other processes are ROHS compliant. Next. This is the transport optimization. Earlier we used to buy material from Saidabad, Delhi, about 1500 kilometers away from our place, and it was subsequently we started buying material from Khopoli. So a lot of scope 3 GHG emissions are reduced. So this way we have done a lot of projects for GHG reduction in, especially in scope 3. Next. Awareness creation in supply chain. We have made awareness, circulated green policy amongst our vendors to sub-vendors. Next. We have maintained greenery surrounding our plant. We have not covered open space surrounding our plant by doing concreting or putting pavers in view of ground water table maintenance. Next. On the occasion, we conducted poster competition amongst our employees, and the best is displayed, which subsequently got award from our customer too. Next. So this was the poster which got award. Next. These are the milk run concept which we have started using for dispatch of our material to Shirwal, because both the customers are located in Shirwal, and earlier we used to send separate vehicles to all both the plants. Now we have started clubbing some material and saving on GHG emissions. Next. Similarly, for local collection of raw material and finished goods from sub-vendors, we have been using milk run concept, which has saved 22 kilometers per day and about 400 rupees saving in transportation cost. Next. These are on a few more initiatives, like pooling in is the grouping together for employee commute and inward and outward transportation of goods. Next. Communication to customers and supplier of carbon emission is every month we communicate our green indicators to our customer. As Dr. Sunita has said, customer is more worse than regulator. So now our customers are also very strict on all these parameters, and we are trying to maintain all these green parameters within acceptable range. Next. In the process, we have saved a lot of energy by in various this thing like introduction of VFD, installation of VFD, solar energy, then water conservation, material conservation. A lot of saving is achieved in the process. Next. And as a result, you can see we have started maintaining data and maintaining GHG accounting 2013-14 to 2019-20, and it has helped us reduction of 24.62% in GHG intensity per metric ton of production from 2013-14 to 2019-20. Next. In the process, we have got a lot of tangible and intangible benefits: electricity conservation, renewable energy addition, water conservation, resource conservation, LPG gas reduction, waste reduction, GHG emission mitigation. Total investment was around 45 lakhs. Monetary savings were 17 lakhs. In lot of intangible benefits, more concerned, more responsible towards Mother Nature, even while achieving higher growth with optimal use of resources and better emission. Then we enhance credibility and provide increased ability to raise capital. Because of this, we have got financial support from SIDBI at the rate at very competitive interest rate of 8.27% 2 years back. We are equipped to meet future environmental regulations and mitigate future environmental risks. We anticipate the future instead of reacting to the regulatory requirements, and there are also export opportunities for us. So all these benefits, PQ, CD, SME parameters we have started getting. Next. Besides these things, our total employee involvement and building culture in the organization, besides trainings on various topics, we celebrate national and international days. As you see in the slide, we celebrate World Environment Day, World Water Day, Blood Donation Camp, No Tobacco Day, Women's Day, Safety Day, Gandhi Jayanti, on which we clean surroundings of our factory. Not only inside we are keeping our factory clean, but we also maintain outside the out of the fence area clean. Next. You can see a few photos of Environment Day. We carry out surrounding cleanliness drive, Parisar Swachhata Abhiyan. All the employees from top to bottom work during this power cleaning drive for an hour. We also celebrate Safety Day, medical checkup camp, Safety Week, performance awards, birthday celebrations, annual get together, creating awareness for social cause and donations for same are few more CSR activities which are regularly done in our plant. Company has received many awards and accolades consequently for last 5 years at various CII national cluster summits, conferences, forums held at Delhi, Hyderabad, Pune for Kaizen's Pokayoke case study presentations, especially on green manufacturing, energy and cost, waste management, quality and productivity. Next. Very prestigious out of all this CII Greenco Platinum rating at the hands of Shri Nitin Desai, member of Prime Minister Council on Climate Change at CII Summit 2016 at Hyderabad, in presence of Mr. Zain Godrej and Mr. Pradeep Bhargava. That next. Last year we also received one award from IMTMA Bangalore for our National Productivity Summit case study. Next. We would like to thank WRI, especially Ms. Megha and team CII for giving us the opportunity to share our GHG learning Greenco journey at such forum. Thank you. Thank you very much.
Thank you, Mr. Kutale, for sharing with the MSMEs who just are starting or planning to start with GHG accounting. Your presentation helps us to shape the concepts that were used to explore mitigating opportunities from inventorization of GHG emissions. We finally are going towards our last session of the training today. But before that, I'd just like to make an announcement, which would be that after this session, which is going to be a very quick, small session on just linking target setting and GHG management, we would have an exercise by Atik, and post that we can have question answers verbally, or we'll anyway be sending answers after the workshop, after this training, and most of them we have tried to address on the chat. So I would now like to invite Shubhangi Gupta from World Resources Institute to talk about the critical nexus of GHG accounting, target setting, and in identification of mitigation opportunities. Over to you, Shubhangi. I'm sorry, I'm skipping your introduction.
Hi, am I audible now?
Yes, clear.
Okay, thanks, Megha. So I'll dive right in. If you could go to the next slide, please. Thanks. So over the last 1.5 to 2 hours, we've talked about why GHG accounting and reporting is relevant to MSMEs, and we've also covered the basics of how GHG accounting can be done using the corporate protocol standard. But what is the utility and application of this accounting and reporting? Mr. Kotale very succinctly highlighted some of the applications, and that's what the section on GHG management is going to cover in some detail. So GHG management can be divided into 3 stages. The first is periodically quantifying and reporting emissions, which is what Shubhito and Atik covered in detail. One point to note here, which Shubhito also talked about, is identifying a base year. And although the base year itself is independent of the calculation of your emissions, it is a very important component of the process for 2 reasons. One is to be able to compare your emission trends over time with respect to that fixed base year. And the second is for setting an emissions target in a future target year, again with respect to that fixed base year. And a very important consideration here, as Shubhito mentioned, is that the base year emissions must be representative of the current emissions in terms of organizational boundaries. So it must, in case there are changes in the calculation methodology or in the boundaries, then that base year must be recalculated. And once your GHG inventory from the base year till the present year is complete, we can proceed to the next step, which is identifying GHG reduction opportunities and target setting, which I'll get into a bit more detail. Next slide, please. Okay, so in order to identify the reduction potential for your company, there are 2 steps you would need to follow. The first is to identify what your key sources of emissions are and how they are changing over time. These are called the level and trend analyses. The level analysis highlights your key sources of emissions in every year and has been represented in the graph on the side by the 5 sources if you go from top to bottom, those 5 lines. So the one on top has the highest share, and as you go down, the share keeps reducing. The trend analysis, on the other hand, shows you how each of those sources are changing over time. So if you look at each line horizontally, the trajectory of each line. This is important to consider while assessing your mitigation opportunities, because as you can see in the graph, perhaps you'll find that a source which was initially high in its share of the total emissions is actually falling over time, like source 3, the gray line that you see. And maybe a source which had an initial smaller share is rising over time, like source 4, which is the yellow line. So maybe it would make more sense for you to focus on the yellow line instead of the gray one, given the trends it projects in the future. So together, these 2 analyses give you a holistic picture of what your emissions of your emission sources and thus what to focus on. Next slide, please. Step 2 is to determine how much influence you as an organization have over each of these key identified sources of emissions from the previous step. Typically, by definition, as we heard earlier, the definition of the 3 scopes. An organization's influence will be maximum over their scope 1 emissions, obviously, followed by scope 2 and then scope 3. And this can help in identifying which key emission sources you can actively mitigate yourself. A simple example here is electricity, which is your scope 2 emissions. And let's say, for example, it's the highest source of emissions, high source in your emission mix as identified from the level and trend analysis. Assuming you get this electricity from India's grid, the emissions from that can be calculated by multiplying the amount of electricity you consume in a period of time by the emission factor of India's grid electricity, which Atik talked about. So by definition, if you want to reduce your scope 2 emissions, you can reduce either one of these 2 variables, right? But while, of course, you have control over the amount of electricity you consume, you may not have as much control over the emission factor of the electricity that you do use. So this highlights what you should focus on first, which would be to reduce your electricity consumption, perhaps through energy efficient technologies. And then maybe in the longer term, as alternative sources of clean energy become cheaper, like renewable energy, you can switch to those to reduce the emission factor. Next slide, please. Thus, bringing these 2 previous steps together, you can identify a subset of your emission sources that you can mitigate such that they are high impact in terms of share of your total emissions, as well as the degree of influence you hold over these 2 emissions. So that smaller subset is the yellow part you can see in the circle. These identified mitigation opportunities can then be converted into concrete targets through the target setting. Next slide, please. Target setting is the 3rd phase of GHG management. GHG reduction target is a formal commitment to reduce the GHG emissions from your organizational activity. This target must be defined in terms of a specific quantity in relation to a fixed base year in the past and must be time bound. That is, the target should be aimed to be completed in a specific target year in the future. Next slide, please. Based on these 3 principles, there are 3 considerations while determining a target. The first is the type of the target, that is whether it is an absolute emissions target, which is defined in tons or metric tons of CO2 equivalent, or it can be an emission intensity target, which is the amount of emissions per unit of physical output that you have, like tons of cement, for example, or economic output like revenue. Both of these options have their pros and cons. An absolute emissions target leads to an actual quantity of emissions to be reduced, but as a result may not necessarily track efficiency improvements, as a reduction may be due to a fall in the output rather than the emission reduction activities. Like during the COVID lockdown, for example, because operations were shut, the emissions went down, but that's not because of specific emission reduction activities. On the other hand, an intensity target allows you to track that efficiency of emissions with respect to your physical or economic output, but may not lead to an actual specific reduction in an amount of emissions, because even though your efficiency improves, your emissions can also still keep rising if your output also rises. So usually, typically, both targets, like both versions of the targets are said to be, should be looked at. Next slide, please. The second step in target setting is to identify, or the second consideration is to identify which emission scopes you would like to set a target for. This can be determined from the level and trend analysis and the organizational influence steps I talked about earlier. And the third consideration is the target year for which the target must be determined. Usually, this is done over 3 time frames: the short term, which refers to the next immediate 5 years, the medium term, which is from the 5th to 15th year, and then the long term, which is usually a carbon neutrality target for 2050, if the company would like to adhere to the global commitment to limit global warming to 1.5 or 2 degrees Celsius, which is the target, which is a global commitment that has been determined by a community of climate scientists at the IPCC. Next slide, please. Finally, using these decisions, the kind of target that you commit to can be determined. There are different types of targets that an MSME can adopt, such as energy efficiency, renewable energy, reducing process emissions, all of which Mr. Kutale covered, and also a science-based target, which is a target that makes the company compliant with climate science and the global commitment to limiting global warming to either 1.5 degrees Celsius, which would include reducing your emissions by 50% by 2030 from a base year of 2018, or 2 degrees Celsius by reducing emissions by 30% by 2030 from a base year of 2018. So this brings me to the end of my session. I apologize for going over this really fast in the interest of time, but these are the different kinds of targets such as energy efficiency and renewable energy that are highly relevant to MSMEs. And thus, we will be dedicating specific sessions in this training series in the coming months to them, where we'll cover the various options and technologies available for MSMEs in India. And yeah, giving it back to you. Thank you.
Thank you, Shubhangi, for closing the loop between target setting and the first step of GHG inventorization towards a low carbon operations for the MSME sector. I would now give the floor to Tejaswini and maybe Atik to do his questions, and post that we can take question answers. Does that sound good?
Sure,
Yeah,
no
that
problem.
sounds
Yeah.
Yeah, so let's
so
do the
I-
exercises, I think, and then maybe we take a couple of questions and let's try to end in the next 10 minutes, yeah? Because
Sure.
we're over time. Okay, thanks.
Yeah. Yeah, so I'll be launching 4 questions in total, and I'll give like 30 seconds to 45 seconds to answer each. And I'll request Mr. Atik to just discuss the answers briefly after when I share the responses from the participants.
Sure, I will do that. Yeah.
Okay, here goes the first one.
So the question here is like, what is the relevant activity data for calculating GHG emissions from coal-operated company furnace? So I would request participants to think, like if you want to estimate emissions from coal consumption in boiler, what data they should collect, and based on that they can respond to the poll question. Yeah. As rightly highlighted, 94% mentioned that quantity of coal consumed in the furnace. So for the 6% people who have answered this as a number of hours per day furnace is operated, see, you have to think from a point of view, like if you want to estimate the emissions from fuel, then how you will convert number of hours into emissions. So you have to think in that direction and try collecting the data or identify what activity data has to be collected. So I hope it is clear to you on quantity of coal. So quantity of coal we can multiply with the emission factors, and then we can estimate the emissions. Next question, next poll question we can take, please. Yeah. So the second question for the poll is, which emission factor below would be quantify, will be able to quantify scope 2 emissions from a company purchasing electricity from the grid. So what type of emission factor you use to convert electricity consumption from grid into emissions? Yeah. As mentioned, as seen, 86% have given the right answer, which is grid emission factor. Now, if we go for a thermal power plant or DG set emission factor, then it will be specific to that, I would say, fuel only. Now, if I talk about India's grid emission factor, we have multiple emission sources like multiple power generation sources like nuclear power plant, thermal power plant, coal or gas-based power plant, then hydro power plant. So all these numbers are, or the grid emission factor is considered calculated considering various type of power generating sources, because as when you're purchasing electricity from the grid, you don't know whether it is from a thermal power plant or from a nuclear power plant. So we take an average grid emission factor for our estimation. I hope it is clear to all the participants who have attempted, have given the other two answer, which is not the grid emission factor and DG set. Tejas, we can go to the next poll question. Yeah. So what is the meaning of global warming potential? So as I explained in my slide, here what the GWP is calculated considering the basis of certain GHG. So you can attempt that answer here. So 1 unit of CO2, that is the right answer, as GWP is nothing but converting any other greenhouse gases into equivalent of CO2. So 1 unit of CO2 is the right answer for this whole question. We can go to the next, I guess, last whole question then. Yeah. So this is a quick calculation. Maybe here we will give some 30-40 seconds for you to calculate. The question is that we have to calculate total CO2 emissions from use of 1800 tons of coal, which emission factor is 1.4 tons of CO2 per ton of coal, and 10,000 megawatt hour of electricity, and emission factor is 0.83 tons of CO2 per megawatt hour. So you have to calculate 1800 multiplied with emission factor plus electricity multiplied by the emission factor. So whenever you do a GHG calculation, you please take care of the units. Sometimes the emission factor is in kg and you are multiplying with the tons number. So always this type of mistake we also do when we are doing some accounting. So please always take care of this unit conversion when you are estimating the GHG emission. So the right answer is 10,820 tons of CO2. So for other people who have not given the correct answer, you may just try to do a calculation whenever you have time and you'll be able to get the right answer. Yeah. Over to you, Tejaswini. So I guess this was the last poll question from my presentation.
Thank you so much. Thank you so much, Mr. Atik. Okay, so we'll quickly take 1 or 2 questions that we got in our question panel. This is for Mr. Shubrata. It says, under which approach would warehousing company fall under? It constructs the warehouse and then leases it to the tenants and has no control over it, but has control related to common area.
Can you hear me?
Yes, we can hear you.
Okay, great. Yeah, I'm really not sure if I understood the question correctly, but I'm presuming that it's related to leased assets. Now, when it comes to lease assets, emissions from such contractual arrangements are only classified as scope 3 if the selected consolidation approach does not apply to them. So clarification on the classification of these leased assets can be obtained from the financial division of a particular company. Any other question for me?
Yes. What would happen for the rest? I think this is with regard to the example that you had in one of your slides. What would happen to the rest of the 500 metric ton of CO2 equivalent per year emissions under the equity approach in the first example?
Yeah, in that example, you see the reporting company is only interested in the GHG emissions from the operations according to its share of equity in the operation, because that is the approach that they have chosen. So they are not really interested on the rest of the 500 metric tons of CO2 emissions. That cannot be reported under, they cannot report basically the remaining 500 ton. They can only report for that for which they have, their share of equity is there. So, yeah.
Thank you. The next question is for Mr. Atik, and I think this will be our last question. When oil is used for lubrication purpose, will it be counted as scope 1?
So for lubrication, usually what happens is that we will have to account for certain oxidation factors and try to estimate what could be the emissions. Sometimes lubrication is just used as, I would say, for providing a soft transmission or to prevent some failure. but sometimes it mixed with the fuel also, like in case of our engine oil sometimes. So definitely, if it is combusted and some CO2 emissions are there, it will come under scope 1 emission category for the company who is using the lubricant oil.
Thank you, Mr. Atik. To the participants, just to inform you that all the other questions that we got, we would make a Q&A document, and it would be emailed to you as well, along with 2 exercises that Mr. Atik has for you. It would be sent to you guys through email, and you can get in touch with us if you have any technical questions relating to those exercises. Thank you. Megha, to you.
Thanks, Tejaswini. So just to conclude, thank you. So GHG accounting and reporting is the first step to climate positive actions by a company. And over the last 2.5 hours, we've got a very insightful overview of why accounting is important for MSMEs from the perspective of green procurement requirements by large companies, such as Mahindra Life Spaces, and also from an MSME itself, we also had Mr. Shubhrato Chakrabarti from WRI India and Mr. Atik Sheikh from CII covering the basics of how to start your accounting and reporting process. So if you have any other further questions, please do feel free to reach out to us at any point. You will find the contact details of Megha Nath from WRI and Atik Sheikh from CII at the end of this presentation slide deck that we'll share with you soon after the end of the session. Finally, do tune in to the next few sessions that we will be holding in the coming months that build onto the next steps after accounting, such as mitigation opportunities for MSMEs, as well as finance and policy options for various schemes in India for MSMEs. We really hope you found this session useful, and thank you for joining us today. You will find a short survey form on your screen at the end of the session when we close it. Please do take a minute to answer it. And we will also share with you by email a recording of this webinar, the presentation slide deck with the extra case study and exercises by Atik that Tejaswini mentioned, the question and answer summary document with all your questions and answers, and your participation certificates for the session. We'll send them by email. And we apologize for exceeding the time limit, but as you saw, we had a lot of content to cover today. Thank you so much and have a nice evening.